everybody, Scott Sachs with the Synergy Group, and welcome to another edition of our Market Research Report. RBI stats are out. Now again, these are trailing month to month, so this is July stats that come out in August. We're about a week behind our normal presentation of this data, so we apologize, but we want to make sure we're getting it out there every month. So this month, obviously, we always cover Montgomery County, Arlington County, and Washington, D.C. to give you a sense of what's going on around the DMV. One thing I want to mention is the market is getting hyper-local. Whether it's DC, Montgomery County, Arlington, Northern Virginia, what market you're in, whether it's neighborhood specific, school district driven, proximity to commuting routes, all of that is starting to matter more again. So as we go through statistics, they're generally reaching numbers on what to expect and how we extrapolate the data. But I just want to set the guideline for that going into this. So here's our jurisdictions, active listings. This is year over year, trailing July. Montgomery County up 32.87%, Arlington County up 6.74%, Washington up 28.09%. Again, these are relative numbers because a year ago this time, inventory was extremely low. What was happening a year ago this time? We had the largest increase in lending rates in history over the course of 45 days. From the end of July into the beginning of September, they went up 150 basis points. Now, we're seeing the exact opposite thing happening. So we're going to get into that a little bit more on rates, but this is what you're seeing. So we are seeing inventory creeping up across all jurisdictions. Arlington County, the healthiest based off of the inventory and what we're seeing on a sales to list price ratio. Average price across all jurisdictions up almost equal. 5.36, 5.03%, and 5.81% in Washington, D.C. So we are seeing year over year increases, but keep in mind again, what happened last year between August and November, we saw a very large lull in the market across the DMV where everything slowed down because of rates shooting up. Now, this is one of my favorite metrics to track because it gives you a real-time how are deals transacting metrics for how to interpret the market. This is your average sales price to original list price ratio, okay? So it's not where an agent's gone in and done a price cut and then they get a full price contract or then the price goes higher. This is how does it compare to how the market or the property was originally brought to market. So in Montgomery County, we saw a decline of 0.68% of the sales price to list price, which means it's trading under list price now in the market. Arlington County was essentially flat, increase of 0.07%, which is negligible. And in Washington, D.C., we saw a decline of 0.7%, right? So if you were to run this number from a year ago, which we have the video posted from a year ago, you will see that we were actually, average sales price was up like 2, 3, 4, 5, 6% over the list price a year ago. So what we're seeing is a couple things happening. One is we've seen appreciation in pricing, right? So where we were seeing 6, 7% over list price before, well, now it's baked into our numbers, right? One of the things we've seen specifically over the last 3 or 4 months is pricing becoming very, very important on whether a property is going to move through a weekend. We're seeing days on market creeping up across all jurisdictions, and part of that is because agents are pricing properties to April numbers instead of today's numbers. That's really important. That factors into these numbers. Where we're seeing declines in pricing is because people are having to meet where the demand level is now, not where it was back in April, May, even June of 2024. So let's look at what the current rates are doing now, right? So the 10-year Treasury, which is really what the lending rates are tied closest to, has dipped down to 3.82% as of this morning. When we hit the high last year, which would have been like beginning of October of last year, it actually spiked above 5 but closed at 4.99%. The way to look at that is the lending rate trades roughly with a 200 basis point spread above where the 10-year trades. So if you look at this at 3.82, the 30-year mortgage today is at 6.049%, calculating in APR, which is annual percentage rate, which builds in fees and other things. So if you look at that, that's roughly 6%, 200 basis points above-ish, gets you really close to the number. If you look at where the high was at 4.99%, now last year, this same time, the rate was at 7.09%, okay? So we were a full basis point higher, and look, we're almost a full basis point. The 10-year Treasury a year ago was roughly at 4.8. So we're really close to a 100-point spread here and a 100-point spread on the lending rate. So what I want to point out here, last year we were at 7.09%. The cost of a house was less, right? So we've gone up, this is year over year 5%, but we've had months going back to April, May, and some of the videos that we've shot. This has been 14, 15, 16% change year over year. So you're getting a 16% increase in Arlington County year over year, which is pretty accurate number for the county in whole, yet the rate is only a 1% change. It is less affordable now, even with the rate being down to 6%, than it was a year ago, okay? So when we talk about rates increasing, and we're gonna be launching another separate video just talking about the Fed cuts, what it means for homeownership affordability, and what it means for the fall market. And this gives you a breakdown of just what's going on in the market, and then looking into the fall, what do we anticipate happening? Well, I think we're gonna see stabilization. This number right here points to the fact that you're not seeing the multiple bid scenarios that we saw back in May, June. That's slowed down. Consumer sentiment has tapered a little bit, so people are being a little bit more cautious about what they're stepping into, what the rate looks like, and making sure they're making smart decisions. And those are good things to see in the market. As a practitioner, I want to see that stabilization. I want there to be a little bit more equilibrium in the marketplace. I think we're going to see some of that going into the fall. And with rates coming down, the Fed isn't sure if they're going to cut 25 or 50 basis points. But even if it's 25, and the projections say we could get 75 basis points before the end of the year, I think going into October, November, December, we're going to see a buying opportunity. There's going to be a buyer opportunity where you can come in and get a lower rate. We might see a little bit of price elasticity where prices come down a little bit more as well. That could be the opportunity for you. For more information, synergysoldit.com, or reach out to us to learn how we can help you on the buy or sell side of your transaction. Take care.